Welcome to the deep dive. Today we're taking a focused look into Amazon's 2024 annual report.
Right?
Our goal is really to cut through the noise, and deliver the essentials on their businesses, their financials, and where they might be heading.
Yeah, it's quite the report. A real snapshot of a company operating at just massive scale.
So consider this your, let's say, accelerated path to grasping what really mattered in Amazon's 2024.
Exactly. We'll be digging into those core segments, their growth strategies, the challenges, and definitely the key financial numbers.
Okay, let's dive right in then. Business segments. Starting with the stores business. What we might think of as just online shopping. What are the sort of underlying trends there?
Well, it's really fascinating. It's just the sheer scale of selection expansion. It's not just adding stuff. It's this ambition to be the place for, well, almost anything.
Mhm.
And they keep hammering that low price point. Profit Arrow finding them the lowest online U.S. retailer again for the 8th year.
Yeah.
That's a powerful message.
Yeah, 8 years is quite a run. How do they balance that with expanding, though?
That's the strategic puzzle, isn't it? Maintaining price leadership while adding complexity. But delivery speed is also key.
Right, the Prime delivery speeds. They mentioned records again.
They did. Record speeds for the second year running. It shows this relentless investment in logistics. It's not just a perk, it builds serious loyalty.
Huh.
And you see them leveraging that network, like with Amazon Pharmacy, promising same-day delivery in some places. That's moving into new territory.
Interesting. Okay, let's switch gears to AWS, Amazon Web Services. The cloud space is always moving fast. What jumped out for AWS in 2024?
Well, the growth is still really solid. 19% increase in net sales. That's substantial.
Definitely.
And it seems fueled by two things. Ongoing demand for the basic infrastructure, the plumbing of the internet, but also this really aggressive push into AI.
Ah, AI, of course.
Yeah. Launching custom silicon like Trainium 2 that tells you they're serious about optimizing for those really demanding AI jobs, both for performance and, crucially, cost.
Right, getting the cost down is key.
Absolutely. And then you have things like Amazon Nova, their new foundation models, plus expanding SageMaker and Bedrock. It's all about making these advanced AI tools easier for, well, everyone to use and build with.
Making it more accessible.
Exactly. Democratizing it, in a way.
Okay, and Prime Video, it feels like it's gone way beyond just being a Prime membership add-on.
Oh, definitely. It's a major entertainment player now.
Yeah.
Their strategy seems multifaceted. You've got the big original shows, Fallout, Reacher, Rings of Power, drawing people in.
Yeah, Fallout was huge.
Right. Plus popular movies. And then the really strategic move into live sports. Thursday Night Football, UEFA Champions League, and now NBA and NASCAR coming in 2025.
Live sports is a big draw.
Huge for getting and keeping subscribers. And adding channels like Apple TV Plus just broadens the appeal, making Prime Video feel more like a central hub. It boosts the value of Prime overall.
Makes sense. Even the Kindles seem to get a boost.
Yeah, that was interesting. Highest Kindle unit sales in a single quarter for over 10 years.
Wow. What drove that?
Likely the new hardware.
Hmm.
Adding a color version, the bigger scribe option for note-taking, faster paperwhites. They're clearly catering to different needs and showing they're still innovating on a core product.
Okay, so all this innovation, it seems connected to their internal culture. They talk about this why culture. Can you unpack that a bit?
Sure. The why culture, fundamentally, is about constantly questioning assumptions, really digging deep to understand the core customer problem they're trying to solve. It's not just tinkering, it's about reimagining things.
Like asking, why not offer every book ever printed?
Exactly. That wasn't just about selling more books. It was about creating this ultimate online bookstore, changing how people find information, or, the big one. Why do companies need their own expensive data centers? Boom. AWS is born.
An entire industry.
Pretty much. And it's backed up by specific ways of working.
The leadership principles.
Right. Things like are right a lot, which sounds arrogant, but is actually about seeking diverse views and being willing to change your mind. Intellectual humility.
Okay.
And have backbone, disagree, and commit. That encourages healthy debate, pushback, but once a decision is made, everyone rows in the same direction.
So debate, then unity.
Precisely. And then you have practical things, like writing narratives instead of using PowerPoint, forces deeper thinking. Or the working backwards process, start with the press release for the customer.
Ensures it's customer-focused from day one.
Exactly. And they still emphasize collaborating in person for invention, which is interesting in today's world.
They also talk about operating like the world's largest startup. What does that actually mean in practice?
It means trying to keep that day one energy, even at their massive scale.
Sure.
So relentless focus on customer problems, empowering builders, valuing speed incredibly highly, actively fighting bureaucracy.
Trying to stay nimble.
Yeah, and being scrappy. They cite early examples like S3 and EC2 being built by small, resourceful teams. It also means being willing to take calculated risks and always, always prioritize customer results, avoiding getting slow and complacent.
So looking ahead, what are the next big whys guiding them? AI seems front and center.
Oh, absolutely central. They see AI potentially reinventing, well, everything. Productivity, cost savings, entire customer experiences across all their sectors. It's not seen as a decade-long thing. It's happening fast.
And AWS is investing heavily there.
Hugely. Trainium chips, SageMaker, Bedrock, Nova models, building the fundamental tools, the AI primitives as they call them. They acknowledge it requires massive capital investment. Those chips aren't cheap and demand is high. But they clearly believe the long-term free cash flow and return on investment will be there.
Beyond AI.
Other big whys include things like faster delivery, even in smaller towns and rural areas. Real investment there. Then there's Project Kuiper, aiming to bridge the digital divide with satellite broadband. That's a huge undertaking, over 3,200 satellites planned. And healthcare remains a focus, using Amazon Pharmacy and One Medical to try and ease some of the stress in that system, leveraging their logistics and customer interface.
Of course, with all this ambition, there are risks.
For sure. The report lays them out: economic downturns, fierce competition everywhere, the complexities of global operations, regulations changing, keeping up with technology. It's a long list. Managing that scale and pace of innovation is a constant challenge.
Okay, let's pivot to the financials for 2024. The numbers. What's the big picture story?
The big picture is strong, sustainable growth. The real focus seems to be on growing free cash flow over the long haul.
How did they do that in 2024?
Mainly through really significant growth in operating income, plus managing their capital efficiently. Consolidated net sales climbed up to nearly $638 billion.
Driven by.
Growth across the board, really. Solid performance in North America. International sales up 9%, even with some unfavorable currency effects. And AWS, as we said, up a strong 19%. That points to more customers using more services.
And profitability, that saw a big jump, right?
Yeah. A huge jump. Consolidated operating income basically doubled, hitting $68.6 billion compared to $36.9 billion a year before.
What fueled that?
Better unit sales and advertising sales in North America helped a lot. The international segment actually turned profitable, which is significant. And AWS continued its strong contribution. It suggests they're getting more efficient and leveraging their scale better.
Can we dig into the expenses a bit? Where did the money go?
Sure. Cost of sales went up, naturally, with more products being sold. Shipping costs were a massive chunk of that $95.8 billion. Just shows the scale of logistics.
$95 billion on shipping alone. Wow.
Yeah. Fulfillment costs also rose, running all those centers, processing payments, etc. Technology and infrastructure spending increased too, mainly for cloud infrastructure and AI investments.
So didn't they get some benefit there?
They did, interestingly. They extended the estimated useful life of their servers. That decision alone reduced depreciation expense by $3.2 billion.
Which flows through to the bottom line.
Directly. Gave a nice $2.5 billion boost to net income. Sales and marketing costs, meanwhile, actually decreased slightly as a percentage of revenue.
Okay, what about cash flow? You mentioned that's a key focus.
Very key. Net cash from operations was way up, reaching $115.9 billion. And free cash flow, which is basically operating cash flow minus what they spend on property and equipment.
The cash left over after reinvesting.
Exactly. That rose nicely to $32.1 billion, up from $24.1 billion in 2023. Shows they're generating significant cash even while investing heavily. They also track other free cash flow measures like after lease payments and debt repayments.
And their cash reserves.
Strengthened considerably. They ended the year with over $101 billion in cash and investments. That gives them a lot of flexibility.
Any other balance sheet highlights?
Well, besides the cash jump, inventories ticked up slightly, probably reflecting that expanded selection. And total stockholders' equity grew significantly to $286 billion, strengthening the financial base.
So, turning to shareholder value, we often think about share buybacks or dividends. What did the report say there?
Well, it noted they did buy back $6 billion in stock back in 2022, but nothing in 2023 or 2024.
Okay, no buybacks recently. And dividends.
Their report doesn't mention any plans to start paying dividends on common stock right now.
So the focus is still firmly on reinvestment.
It really seems that way. They spent about $780 million on acquisitions in 2024, mostly smaller deals for technology and talent. It aligns with their historical approach, that philosophy from the early shareholder letters.
The 1997 letter they still refer to.
Exactly. Prioritizing long-term market leadership, customer obsession, bold bets over short-term profits or immediate capital returns like dividends.
Makes sense given their history. So, wrapping this up, what's your overall assessment looking forward based on this 2024 deep dive?
I'd say the outlook seems pretty positive, pretty optimistic from their side. You see strong growth momentum, especially in AWS, but retail is also performing better. And these huge investments in AI, they clearly believe that's a massive driver for the future.
And the triple-digit growth in AI services they mentioned.
Yeah, that's a strong early signal. Plus, the continued push into areas like rural delivery, Project Kuiper for global broadband, healthcare. It all points to a long-term vision and a willingness to invest heavily in it.
Their guidance for Q1 2025 seemed okay, if maybe slightly cautious.
Yeah, net sales growth expected between 5% and 9%. You do have to factor in currency headwinds and a comparison against a leap year quarter in 2024, which makes it look a little lower maybe.
Oh.
Operating income guidance is between $14 and $18 billion compared to $15.3 billion a year ago. So still aiming for solid profitability.
Ultimately, it sounds like they're sticking to the playbook while chasing these big new opportunities.
I think that's right. That day one idea, customer-focused delivery, invention, speed, taking risks, it still seems very much alive as they navigate, a pretty complex world.
So to summarize our deep dive into Amazon's 2024, a year of really strong growth across the board, fueled by AWS and improved retail, alongside massive bets on the future, especially AI. And that core philosophy of long-term customer-first innovation seems unchanged.
That sums it up well. It's a picture of a company firing on many cylinders, but also placing huge bets on what's next.
Which brings us to our final thought for you, the learner. Thinking about how deeply Amazon is woven into so many parts of life, what do you see as their biggest opportunity, or maybe their biggest challenge going forward, and how critical will that why culture be in tackling whatever comes next? Something to ponder. Thanks for diving deep with us.